Again, we invite you to submit questions at any time during today's presentation. Type them into the Q&A pod on the right side of your screen. Also, at the conclusion of today's program, we ask that you please complete a brief post-event survey. Take a few moments to complete this survey, as it will help AFP plan future web events. And with that said, it's my pleasure at this time to introduce today's presenter, Amy Wolf. Amy Wolf, MPPA CFRE, is President and CEO of AgSafe, whose mission is to be the education leader for the food and farming industries in supporting their commitment to a healthy, safe, and wholesome food supply. Amy's career has included tenure as a professional staff member in the California State Assembly, serving as an account executive for the E&J Gallo Winery, and as Vice President of the California Agricultural Leadership Foundation. Ms. Wolf is also dedicated to her community and profession, serving on the boards of directors for the Association of Fundraising Professionals and the Agricultural Awareness and Literacy Foundation, as well as being involved in the Girl Scouts Heart of Central California. Amy Wolf received her Master of Public Policy and Administration from California State University in Sacramento and her Bachelor of Science from California Polytechnic State University, San Luis Obispo, and is accredited as a certified fundraising executive. So it's my pleasure at this time to pass the microphone over to Amy Wolf. And Amy, the audience is all yours.
Well, thank you for that wonderful introduction, and good morning or good afternoon, everyone, depending upon where on this beautiful planet you are today. It is my pleasure to take the time with you today and talk a little bit about a topic that I believe is critically important for those of us with development responsibilities, either as directors of development or as executive directors, but is often not a big part of what we talk about in our day-to-day, and in particular, how we spend our time here at the Association of Fundraising Professionals. So, financial literacy. My goal for all of us by the end of our hour together is to ensure that each of you have an understanding of the core elements of nonprofit finance. I want to make sure that you're clear on financial planning and cash management concepts. I want to talk about financial statements and financial reporting, and I'm even going to share some examples, including some of AgSafe's financial reporting. I want to speak to some of the requirements that vary when it comes to nonprofit finance at both the local, state or provincial, and federal government levels. And then we're going to wrap up by speaking about what are the role of the board of directors and what is the role of staff specific to finance within the organization. We've got a lot of meat to cover, but I know for some folks this is new territory, and so I want to highly encourage you to please submit your questions. I will do my best to answer questions as time allows as I cover each of these sections, but I want to promise you, do not let that dissuade you from submitting a question. AFP and I have already committed to, I will be creating a Q&A follow-up document that answers every question that gets submitted in writing and will be distributed back out to all of our webinar participants today. So you've got those answers in writing and depending upon the questions, potentially even some follow-up resources for folks to use. But to help me, I want to have a better understanding of who is participating on today's webinar. It gives me the opportunity to tailor my comments as appropriate. So I want to encourage all of you to please participate in the poll that is on your screen. The first being, what is the role within your organization? Are you an executive director with development duties? Are you a fund development staff member that only has development duties? Are you a fund development staff member with other duties like marketing or communications? Are you other staff? Are you a volunteer? Perhaps you're a board member or a development committee member. So just take a minute or two. If you are participating as a group, if this is a chapter webinar participant, if it's a chapter webinar event, or if it's a group of folks within a company, give me the answer for the majority of the folks in the room. We'll take another minute.
And let me pass along to participate. Simply click on the little radio button to the left of the response that is your selection. And your participation in these polling questions is anonymous. So we'll give it just a few more moments here, Amy.
Perfect. Looks like we're about a third, and a third for the most part. A third EDs, a third development staff who only tackle development, and then a third development staff with other duties. A couple of other staff in for good measure as well.
But it looks like activity's died down, so yeah, let's go ahead and share those results. And indeed, it is a third.
Great. One more poll that will help me out, and that is, what is the size of the development team within your organization? So are you, as I like to say, are you a lone wolf? You're going it alone? Are you part of a dynamic duo, two of you that are tackling development responsibilities? Are you the three musketeers, a trio that's capable of tackling all things development, or are you what I consider an entire army? 4 or more folks within your organization who are dedicated to development staff.
Okay, and again, let's go ahead and end that. It looks like everybody who is going to vote has, and there's the results, Amy.
Very helpful. Okay, so looks like we've got at least 35% of you, more than a third of you, are coming from larger organizations, and the balance, while we have a couple of lone wolves, the balance are either parts of 2s or 3s. And again, that's helpful for me. I as a fund development professional in my career, have been involved in small shops, organizations that we fall into either the lone wolf, the dynamic duo, or the three musketeers category, and never within an organization that has someone whose job is solely dedicated to development. And so it's important that you know that about me, that I tend to lean towards the needs of the smaller organizations, but nonetheless, for those of you that come from organizations with an army of development staff, I think you're going to find today's content very valuable, in particular if you're folks that you're wearing multiple hats or you're an executive director with development responsibility. All right, let's move past the polls and into my first area of expertise, financial planning and cash management. So the first thing I want to make sure everybody has a good understanding about is that nonprofit organizations can set up their financial system in one of two ways. And this isn't a right or a wrong. There are pluses and minuses to the type of accounting system that your organization has in place, but it's very important to understand, first of all, do you know what kind of accounting system your organization uses? The two types of systems that can be in place are an accrual accounting system or a cash accounting system. Cash, working in reverse, cash is just what it sounds like. You are looking at your finance in real time, and you are logging expenses when they happen in real time, and you are making note of revenue when it happens in real time. So, to me, the easiest way that I understand cash accounting systems is cash is real time. This is what is happening right now in this moment, and you book expenses as you pay for them, and you book income as it is actually received in your hot little hands. The accrual system is a system that functions where you make note of both your expenses and your income in a system that most appropriately reflects when transactions are committed to. So let me give you an example. From an income perspective, here at AgSafe, if somebody registers for a class that is going to take place in July, for example, and by the way, understand that our nonprofit does a lot of training, so you think of it in the context of events, but we are a training organization. We're training farmers in how to keep their workers safe. But somebody registers for a class today on May 8th that's not going to take place until July. We are booking that registration having happened today on May 8th. Now, that income will be recognized in July, but we are acknowledging that the registration took place on May 8th, and we are accounting for those dollars received to the organization at that point. Now, what technically happens is that income sits in our balance sheet as a time delay and gets moved into our income bucket when the event takes place in July, but we received the income and recognized it in May. The other way to think of it from the expense side is you get your bill in on May 2nd, right? But you don't intend to pay the bill until May 15th. You still recognize that the bill was received and entered into your system on May 2nd. One of the challenges that happens with accrual accounting systems is that you also have an obligation and a responsibility to be tracking what's happening from a cash perspective. Because, for instance, I've booked income or I've booked expenses, but that's not actually when the money is coming in or when the money is actually going out of our checking account. And so knowing that while accrual has its value, it means that from a practical day-to-day perspective, you still have to be keeping an eye on and be recognizing where you sit from a cash perspective. And why do I want you as development folks, or in particular for that third of you that are executive directors, why do I want you guys to be mindful of this? Well, more often than not, when cash gets crunched within an organization, boards of directors and even executive directors, particularly if you come from a larger organization where you're part of my second two groups, you only have development responsibilities or you have development and other responsibilities, folks come to you to solve the cash problem. And part of what you need to know as a good development staff person, what are the ebbs and flows of money within your organization, and how does that affect what your development planning looks like? Again, I'm going to use my own organization as a great example. AgSafe has a very cash flush and cash dry cycle, because we are the inverse of farmers. So starting in about November and December and going until about right now, end of April, beginning of May, is our busiest time of year. We are training for 6 months. And in that 6-month window, we generate 70% of our organization's income. But once farmers enter the time of year where they are harvesting all those wonderful fresh fruits, vegetables, nuts, and other commodities that we enjoy, they are not in a position to take the time to focus on training their workers. And so I know that we have cash challenges starting in May that carry through until about October. And so we look at development opportunities in our cash, we call it the cash Sahara Desert here at the office, but when we are in our Sahara Desert of cash flow is when we look at development opportunities and write into our development plan conducting development activities during the time of year when we are cash strapped as a way to generate additional revenue into the organization. And so rather than you find yourself caught in a panic because your board of directors comes to you and says, we need to put on a golf tournament right away, we need cash, for you to be effective in a development planning position, knowing, first of all, are you an accrual versus a cash accounting system, but then knowing those cycles of cash flush and cash challenged are very, very critical. If you are a nonprofit who relies heavily on government contract or government reimbursable grants, this is, again, an important part that you as the development person or again, an ED with your development hat on, you need to be thinking about how do you stagger your development opportunities? How do you stagger your annual mail appeal? When do you consider doing a special event? When are you thinking about online giving campaigns? Staggering those events to where they naturally align with cash challenges that exist within the organization. And this leads, segues nicely into my next comment, which is the budgeting cycle within your organization. First of all, does your organization have a budget? I say that, and I can see some of you with eyes wide open and perhaps a few chuckles on the other end of this webinar experience. But ladies and gentlemen, I promise you, I have engaged with nonprofits across Canada, the United States, Mexico, some of the U.S. territories. I travel quite extensively for my job, and so I have the opportunity to interact with a lot of different organizations around the world. There are many organizations that don't even have a budget. So first and foremost, budgets are plans. It is a plan for what you expect to happen for the coming time frame. And I say time frame because some organizations pursue an annual budget. Some organizations leverage a multi-year budget that makes adjustments as they go, depending upon timing. What you do in terms of a timing perspective is an internal discussion that needs to happen based on your workflow, some of those government contracts or some of those grants. What time frame you pick is based on many, many variables. I'll use, AgSafe as an example. We develop an annual budget, but it is it's a rolling process. And that has come about over the years because we have been growing so rapidly during the 10 years that I've been with the organization. There's a fluidity to our budget that, quite frankly, I am sort of a numbers purist. My mom was a nonprofit finance director for almost 40 years, and so I was raised in a very traditional finance, black and white, this is the way it's done kind of household. So to evolve AgSafe to a place where we take a more fluid look at how we use our budget has taken some getting used to. But what I was finding happening was our budget that we created right now, we are a July 1 through June 30 fiscal year, and so end of April, beginning of May is when we're working on our budget. What we expected to happen next March, by the time we got there, so many factors had changed, the budget was actually no longer helpful. It was no longer getting us from point A to point B in a place that ensured we were being fiscally responsible. And so we create an annual budget, and when we get until the November-December timeframe, we evaluate the previous fiscal year's performance with what we know is coming up for the organization. And my board of directors has been open to making modifications to our budget accordingly to reflect those changes. Now, a couple of key things that I commented in there. Number one, our budget is a zero-based budget, and it is built on the previous financial year's actual expenses and actual income. Zero-based budget means that our expenses and our income, we get to the bottom of that document, and once we have accounted for paying for debt, once we have accounted for all of the other non-annual expenses, again, which is predominantly associated with debt, and I'll speak to that here in a second, it's a zero at the bottom. Now, we budget to put money into our savings account, and like I said, we budget to pay for, we have a mortgage on a building that we own. We also own some company vehicles and are obviously paying debt on those items. But once we have accounted for the day-to-day activities, the costs of providing training and managing our debt, as well as budgeting for our savings, at the end of that document, it should be a zero. That's the concept of zero-based budgeting. All of your income, all of your expenses, you get to the end of the document and there's a zero at the end. What your timeline looks like is completely dependent upon what is in the best interest of your organization. I know a number of organizations that, because they are so closely tied to government contract, their fiscal year is in alignment with their government's fiscal year. I've seen that both in Canada as well as the United States. When I came to AgSafe, we were a calendar fiscal year. We were a January to December, but our largest event of the year takes place in February, and as such, the income and expenses for that event was being straddled across 2 fiscal years, and it was, quite frankly, making our life very difficult from a budgeting and planning perspective. And so, as an organization based here in the United States, we went through the process of changing our fiscal year from a calendar year to a July 1 to June 30 fiscal year. Just, that process entails notifying the IRS of our intent to make that change. And then we had what I called the hiccup year. So we had a 6-month fiscal year of that January to June timeframe. Still had to file all of the appropriate tax documentation here in the United States as well as in the state of California, and then kicked off our next fiscal year, July 1 to June 30. I share that because I want to make sure folks understand and recognize fiscal years are not set in stone. They're not forever and ever, amen. You can make changes to that kind of infrastructure, but I highly recommend that it involves conversation with third-party experts, in our case, using our auditor and having conversation with that firm to determine that this was much better from our natural workflow that occurred within the organization. And I spoke to it previously, but just to make sure that I solidify this comment, the development team, those individuals with development responsibilities, you need to be involved in the budgeting process. It's one of the reasons why I need you to understand the basic financial infrastructure of your organization and recognize the very critical role that you play in generating resources and generating revenue so your organization can do their good work. And for you to be effective, it's not just at knowing the organization's mission, being able to speak compassionately about the good that you are doing. You need to know this back-end information. And maybe the big event that you're doing in the middle of a cash flush time for your organization is the wrong time to be doing it. Maybe you do need to look at bringing in new elements to your development plan. Maybe you add a second annual appeal at a time of year when, from a financial perspective, your organization will benefit greatly from having that influx of cash. All right. Cash flow and timing. This is what happens. I get so excited and I start getting into the meat of things, and then I forget what I put on my dang slides. All right. So timing of cash flow. Here at AgSafe, we do our big annual conference every year, and it's still the single largest training activity that we have, and it is also the single largest expense. Every year, I choke a little bit when I sign the $175,000 check that I need to sign for one vendor as part of that event. And a big part of what our organization has done to ensure that doesn't have a detrimental effect to our organization was also how we pursued having a line of credit. And I'm going to speak to that here in a little bit. But I just want to ensure that everybody understands and is very clear on the role that you play in development in ensuring that your programs and your opportunities to, again, not just to generate resources for the organization, but that the resources that you are generating come at a time when the organization may not be able to generate other kinds of resources. That also begs the question, or that has me operating from a place of presumption that you have a diversified revenue stream. And I will say, again, based on my years in this industry, the time that I've spent on the AFP International Board of Directors and my involvement with local AFP chapters, is as an industry, we continue to struggle with the diversification of revenue within our organizations. We are still, again, across the board from a generalization as nonprofits, highly dependent upon government contracts, grant funding, and really need to be looking at how we add in additional sources of development revenue, but also beginning to consider the fee-for-service model and how we can be leveraging that within our organizations. And this is the perfect opportunity if you want to try some of these new ideas, new sources of revenue, that you're generating them at a time when your organization needs the cash. All right. Shifting gears a little bit, another aspect of financial planning and cash management is quite frankly, credit and collections. I have an exceptional team of women here at AgSafe. We happen to be an all-female team. That was not by design, but I am very proud of the strength and power of the staff that I get to work with. And quite frankly, one of the skills that a couple of my team members possess is the role that they play in collections. And so, and collections becomes a part of development. I know every single one of you participating in today's webinar has found yourself in a position where somebody had committed to a sponsorship for a special event, and you have had to hunt them down for that money. That's what collections is. And so, it's very important as an organization, and again, why I want you as the development staff to be involved in the development of this process, in the creation of this process within your company, is, first of all, you need to have a formal standard operating procedure in writing about when monies are owed to the organization, how much time is allowed to lapse before you pursue formal collections process, right? So is yours an organization that you give folks 30 days? Do you give people 10 days? Do you give 45 days? How long when you are seeking the collection of revenue? In some instances, we don't get to dictate this, right? I mean, I have over the years, AgSafe has received government contract and government grant funding. At one point, I was owed money for 196 days by the great state of California, and there was not a darn thing I could do about it. So I understand and appreciate that from a contractual perspective, particularly when you're working with the government, you don't get to dictate those terms. However, you do get to set those terms and should be making those terms very clear in your communication and all other ways in which people are providing revenue to your organization. And I'm going to use sponsorship as a phenomenal opportunity. We have money is due by this date for sponsorships of our biggest event of the year. And we need that date to be firm because then it affects my printing deadlines. It affects the program that we create. It affects the signage that we create. And if individuals haven't paid by that date, we internally give ourselves some wiggle room, right, to manage it. But we have a process, and that process includes sending a follow-up financial statement from our finance department to the appropriate contact in that organization's finance department, making sure that they understand that your sponsorship of $1,000 is past due. And then if it doesn't get paid in that time window in which we've provided, depending upon the amount of money that's involved in the circumstances, either our finance staff, my two people who are just gems on the phone, pick up the telephone, because, gang, we get so much email. You can keep sending me emails with reminders about invoices and things like that till the end of time, but we have found over the years our formal process includes when we reach a specific time in how long the money has been owed to us. I have finance staff to pick up the call and just say, hey, John, I noticed that you're 45 days past due with that sponsorship. We really need to ensure that we get those resources in hand because, quite frankly, we want to make sure that we give you the recognition that you deserve for supporting our event. When we get to a place where monies are past due and our finance staff has not had success in getting a response from the contact, at that time our development staff does get involved because more often our development staff are the people that have that relationship. And depending upon the size of your organization, so 35% of you come from businesses, come from organizations that have 4 or more development staff. So my hunch is you're working at fairly good size to even very large operations. The rest of you in the 3 or fewer bucket are probably going to be in the same space that my team and I are in here at AgSafe, and that is the development staff have the relationship. And while I have 2 people that manage our finance responsibilities here at AgSafe, when we get to a place where we're talking about meaningful money, and at AgSafe, $500 or more for us is meaningful money, then we have development staff pick up the phone and say, John, it's Amy. Man, talk to me. What is going on? Because I'm at 75 days past due for your $1,000 sponsorship. My friend, you've been involved with AgSafe for 10 years. I went ahead and put your name on the program anyway, so I did you a solid. I'm now out the money of promoting your business and ensuring your business is recognized for supporting our work and our effort, but that does mean that I need to see those resources. And guys, there's as much science to this as there is art. If this is an organization that has no relationship with our organization whatsoever, it's very much science. You made a commitment to our organization. You owe us the money. It's fairly black and white. And in this regard, I would love to see more nonprofit organizations, in particular smaller grassroots nonprofit organizations. This is where we've got to operate like a business because somebody made that commitment. I understand and recognize that commitment, and now I have acted based on that commitment. If it's an organization that has been involved with AgSafe for many years, it's someone who I know and trust, it's a former board member, our process that is in writing allows for some wiggle room that both my director of finance and I leverage depending upon the person and depending upon the organization. We work in an industry that is highly volatile. There's nothing guaranteed in farming ever. You are relying on the land, on people, on the sun, and on whatever religious entity that you believe in to bring that commodity to fruition. So some of my folks have really great years and some of my folks have really bad years. And so this art of how we focus on collections is also driven in large part by the industry in which I serve. That may not be the right fit for your organization, but too often I see nonprofits, again, in particular, smaller nonprofits, grassroots-based grassroots-based organizations, just let the money go. Just let the money go, or not have a process in place, i.e., after X number of days, we're following up with an email. After X number of days, we're following up with a phone call, and not dedicating some time and energy into ensuring that you receive the monies that are owed to your organization. I will say this organization, AgSafe, for the 10 years that I have been here, we have never engaged a collections agency to assist us. There are businesses whose sole job is to hunt down the money on behalf of your organization. For us, that has never been financially viable, but I want everyone to know and understand that that is also a resource that is available to you, and depending upon the size of your organization, because you will pay a fee. Sometimes it's a flat fee, sometimes it's a percentage of the monies owed to the organization, sometimes it's a combination of both, but you will pay money to have somebody go get you your money. Now, you guys could decide that your policy means once it's a certain dollar amount, you're going to engage a collections firm. We have certainly talked about it over the years here at AgSafe, but again, I give kudos to the staff that are here and that I work with. I have some folks who have that skill set and came to AgSafe with some collections experience, and so for us, we leverage their existing abilities as opposed to expending the additional resources to hunt down the money. All right, shifting gears, financial statements and financial reporting. Actually, I'm gonna follow back up on a question because Michelle Streaky, my apologies if I butchered your last name, but Michelle has asked me, can pledges be legally collected? So based on my experience and the experience of having done multiple capital campaigns with multi-year pledges, no, pledges cannot be legally collected. That is what I know here in the United States. I will freely admit, because we always have participants in our webinars from other countries with a large active presence of AFP in Canada as well as in Mexico. The laws in those two countries may be different, but here in the United States, I should say, and I was about to say California because some states have additional finance law as it pertains to nonprofits. And I'm going to jump to that section a little bit later. I don't know of any state that has added a law that is stronger than the feds. And at the federal level in the United States, no, a pledge cannot be legally collected. And what will happen, and if you've ever been involved in your annual audit, which I'm going to talk about here in a couple minutes, at the end of the fiscal year, the auditors will sit down with the leadership of your organization and determine what monies are on the books that cannot be collected. There's no hope, and so those monies are just written off, and it's declared as bad debt that is not collectible, and it is notated appropriately in your audit. Good question, though, Michelle. And if you need follow-up, please don't hesitate to ask a follow-up question. Skipping forward, though, to financial statements and financial reporting. So within the financial sphere, you have both a statement of activities, which is what it is known as that's what it is known in the for-profit world. In the nonprofit world, it's referred to as an income statement or profit and loss statement, a P&L. And then you have the statement of financial position, which in our vernacular, we refer to it as the balance sheet. And so the easiest way to think of this is your income statement or your profit and loss or your P&L. This is the day-to-day transactional activity of the organization. If you are an organization that functions on a cash basis, This income statement, this P&L is for all intents and purposes, depending upon how sophisticated your organization is, these are your bank statements, right? This is all the money's coming in and all the money's going out. And how those monies are reported on that income statement, again, is dictated by whether or not you are under an accrual accounting system or if you are under a cash accounting system. The balance sheet, the statement of financial position, this is where all other financial transactions for your organization are reported. And so if you, let's just use building debt. If you own a building, your income statement will show your monthly mortgage payments. It will show, both the principal payments as well as the interest that you're paying on that loan, because if you're like me, the bank owns the building right now still. But your balance sheet will show the remainder of the debt. It will show the liability of debt that you are carrying that extends beyond the January 1st reporting of your finances at that particular point in time. Your balance sheet literally ends up balancing at the end, and it is an assessment of and a reporting of the assets of the organization. Those are your bank accounts. If you are owed receivables, those are also considered assets. Those are monies owed to the organization. And then on the flip side, it shows your liabilities. And so what credit card debt do you have if you have company credit cards? Do you have other debt? Like in the case of AgSafe, we have debt in terms of the loans on our vehicles, the loan on our car, the loan on our building. And those two things must equal out. It's your assets and your liabilities must, again, it's called a balance sheet, must balance at the end of every month. This is where you're making note of depreciation of assets, for instance. We're going to look at some examples here in a second that I hope helps folks understand things a little bit better. What I cannot stress enough, literally till I am blue in the face, is if you are so a third of you are executive directors with development responsibilities. So I would hope that the third of you in the ED rules, you guys have seen your organization's P&L and your organization's balance sheet. You might be such a small organization it's being managed by your board treasurer, but that you've seen this. The other piece of this, though, the other 2/3 of you that are development staff just tackling development or development staff with other responsibilities, if you have never seen your organization's statement of activities, if you have never seen your organization's statement of financial position, I implore you to please have a conversation with your boss about your ability to see this information. Technically, as nonprofit organizations, again, and I'm going to speak specifically to the United States, and I apologize to my Canadian and Mexican friends, again, who make up a large portion of our international community. But in the United States, as a 501c3, your information is public record. Everything about your organization is public record, which is why you guys are about to look at P&Ls and balance sheets of AgSafe, because anybody can come to me and say, Amy, I am here to see the books, and I'm here to see the finance, and that is the law of the land. And I have a lot of folks that makes them incredibly, incredibly uncomfortable. Well, first of all, gang, all of that information has been reported on your 990 tax return anyway. This just happens to be information in the middle of the fiscal year, but I come from a place where I encourage, I invite, I welcome transparency. It is critical so as to ensure that we can keep doing the good work that we're doing and never have the potential stigma that somebody's paying funny money. So if you are not an ED, again, if you're those 2/3 of development folks and you have never seen a P&L or a balance sheet, please go have a conversation with your boss. Ask to see these documents. And if you get pushback, send me an email. My email is going to be at the end of this thing, and I am happy to help you navigate how to have that conversation, because it should not be hidden. It should not be private. If you are a 501c3, this is public record. I can also teach you the tricks of the trade and how to go dig up those financials through both state government organizations as well as some of our watchdog friends online. But everybody needs to understand and know, tomorrow I could go get dirt on everybody's organization. And if you don't have staff who see with me eye to eye on this, it's important that you know. But I'm hopeful that your folks are open to it, because learning how to read these documents is part of what adds to your effectiveness as a development staff person. It gives you the bigger picture. You are so much better at writing grants. You are so much better at cultivating major donor relationships when you understand the big picture and can speak to some of the nuanced questions that they have. And there's a whole group of you I know that are listening to me right now that aspire to be an executive director one day. And part of what is essential for executive directors is that you can speak the numbers and that you understand the finance. All right, so my apologies, it's a bit fuzzy. And if anybody wants to actually see these documents and not just screenshots of these documents, y'all are just going to send me a note. But here is the first of 2 pages of my most recent profit and loss statement. And our P&L is about 4 pages long. Some of that is because, quite frankly, we are an organization that keeps our books to the most granular level of detail. When I came to AgSafe, that was the exact opposite situation. When I came to AgSafe, I think we had like 2 buckets for income and 3 buckets for expense. And again, remember, I'm the daughter of a nonprofit finance director. I fell out of my chair and maybe even cried a little bit. But I also inherited an organization that didn't have an organizational budget, so I had a lot of rocks to push uphill relative to getting AgSafe to where it is today. And today, we are Yellow Book audited, and that is something I'll speak to here in a second when I get to audits. But and I've never had material deficiencies, and I welcome and show my books to everybody. Now, the other thing that you may notice is the format and the layout. So what you're looking at, and this is the income side of our profit and loss statement. These are all the various ways in which we generate income, and we do use QuickBooks as our accounting software. My finance director is not only so skilled in QuickBooks, she teaches QuickBooks at our local community college. And so for us, the nonprofit version of QuickBooks has continued to be the best resource for us. There are countless software options available for folks. But this software still allows us to not only classify our income in our larger categories. So you can see at the top we are a membership-based organization, although you don't have to be a member to leverage AgSafe's resources. We are a membership-based organization, and beneath that we then have the different categories of membership. The column in the middle is our performance for the month of March, and our column to the right is our year-to-date performance. And so, for instance, you look at the third main area right there where it says conference, and we have individual member registration, group member registration, non-member registration, sponsorship, all that good stuff. Well, the event took place in February, so there's a reason for March forward. This is going to be an empty bucket, but you see the accumulation of the income as it's been generated over the course of the year to date. I like looking at a profit and loss that gives me the performance of the specific month, but you need the year to date as part of how you evaluate the total story. And again, by the end of March, I am 3/4 through my fiscal year. Next page is the start of our expenses page. Again, so you see at the very top of the picture, we've got total income. Again, March, we generated $163,000 in total income, and year-to-date, we're hovering just below the $1.4 million mark. AgSafe is a nonprofit that generates roughly $2.3 million. We're roughly a $2 to $2.3 million organization each year. You can see expense. People are our biggest expense. We're a service-based organization, and that's what you now begin to see below in the expense areas. Recognize that I have facilities expenses, so we've got all the payroll expenses, and below that we've got equipment, and then below that we have facilities. I have facility expenses that correlate to the programs in each of the income buckets that you see above. But what QuickBooks allows us to do is we can further break things down by income classification. And part of my ability to do that then allows me to cost allocate my operating expenses. So everyone should understand, and quite frankly, I want to see more nonprofits getting to this point. We should all be functioning from a cost accounting position. That means I have the cost of putting on my specific training activities, and then I need to allocate the overhead or the operating expenses. Those are synonymous words. These are the costs that aren't event specific, but they're part of the cost of doing business for us here at AgSafe. It is things like some of our staff's time, because some of our staff are just doing the business of the business, and it's not specific to one individual program. Utilities, paying our mortgage, insurance, right? Liability insurance, auto insurance, those kinds of things. And in the nonprofit world, the way you allocate those overhead expenses is by the percentage of time spent on doing each of those individual programs. And so what we do is we take each of those individual income categories, which for us is how we break down the work that we do, and I do a time study, which is evaluating on an annual basis how much time each staff member is spending into each of those areas, come up with the average of those time studies, and then appropriately allocate that 16% of our time goes toward 16% of our overhead and our operating expenses goes towards fund development. 22% goes towards our annual conference. And that is when I take those operating expenses and add them to the program-specific expenses. And ladies and gentlemen, that is how I know the true cost of putting on a golf tournament, the true cost of providing tractor safety training. I get so frustrated by organizations, particularly when they're talking to me about their development activities, whether it's special events, whether it's an annual mail campaign, and they tell me that they've made X number of dollars, and then I ask them, well, how much did it net out once you factored in the overhead costs or the operating costs? And they're like, what are you talking about? I said, guys, people were picking up the phone, making phone calls to get the sponsorships in an office where the lights were on and the rent was being paid and the air conditioning was working because of overhead costs. So it's a slippery slope to not know the true cost of what it takes to do your work, what it takes to do your, what it takes to actually do your business. Angela has asked a really thoughtful question. What do we use to track employee time, activities, and programs? So we use a timekeeping software. And I know you're all going to ask me, and I have to go look at my phone to go pull it up because it's either Timekeeper, Runkeeper. I just know the icon. So I'll double check because I don't have my phone out right now, obviously. I'll double check on what software we've used. To be honest, we've gone through a couple. And when we were smaller as an organization, people just kept time logs in Excel. Now, we've gotten to be too big for that. And my finance person is also my IT person because here at AgSafe, we all wear multiple hats. But let me double check and confirm because, like I said, I can see the icon in my head, but I'm not 100% on the name of the software. And I'll make sure, Angela, that I include it as part of the Q&A answer at the end. Tim was kind enough to remind me I've got 10 minutes left. So, balance sheet. So here is the first page of our balance sheet. Again, our balance sheet is a tick over 3 pages long, but this gives you the general sense of this is the asset side. You can see our checking and savings assets. We keep a little bit of money in petty cash. We have our accounts receivables. We do have our pledge receivables. To Michelle's question, we do have pledge receivables. These are for pledges that extend beyond the current fiscal year in which we're in. Pledges that are being paid in this current fiscal year are reported on the profit and loss that we just saw. I was a crazy woman, and we did 2 back-to-back capital campaigns because we were growing so much we ended up having to purchase 2 buildings. By the way, don't ever do that. That's my gift to you today. But you can see that those pledges are accounted for here on the balance sheet. Other current assets, we also have fixed assets. We own a building. We do have vehicles, furniture, and computers. So all of those items, again, fixed assets, accounts receivable, all of those are accounted for in the asset side of the balance sheet, and our total assets are at roughly a little over $3 million. And then you look at the current liabilities. I was sitting on a big old bill for our conference that hadn't been paid yet in March, which is why my accounts payable, which is the bills that I have not yet paid, are sitting there. We do have company credit cards. I promise you we're not crazy. You do see 3 sets of company credit cards, but we have been transitioning banks. So we're getting out from underneath one set of cards and moving into another set. Because our team travels as much as they do, credit cards have been an important part of how we do business here as an organization. We've got other liabilities, accrued vacation. Like, a lot of folks forget that if you are providing your folks with paid vacation at the end of employment, you have to pay them out for the hours of vacation that they still have on the books. Well, until they leave you, the value of that vacation time is a liability to the business, because technically if everybody walked out tomorrow, AgSafe would be paying just short of $22,000 of accrued vacation liability to all those individuals who left. Our long-term liabilities, we do have vehicle loans. We've got our mortgage, which is our building loan. And so I've only given you the second page of the balance sheet that ends down at total liabilities. We've got just over $1 million of liabilities, and the remainder of this portion of the balance sheet, which spills over onto page 3, speaks to the equity within the organization. All right, a couple other things to keep important when it comes to statements and reporting. Number 1, my board of directors does not like looking at the P&L and the balance sheet. They said that because we keep our books in such great detail, we actually have a treasurer's report. We use a dashboard, and this not only accounts for current fiscal year, but they also ask, hey, Tim, I'm being told about a connection loss.
Okay, and I did respond to that attendee.
Okay, I'm just making sure. My screen has changed, though, so I'm going to ask you to continue to slide forward because it looks like I've been taken out of some of the options I had previously.
Oh, here we go. Let me, you somehow slipped out of presenter status.
There we go. Okay. So moving forward, we went back a couple of slides in that process. Like I said, my board prefers to see a dashboard that not only compares the current fiscal year, both the month and the year-to-date, but also the previous fiscal year, and in a much more consolidated format. So, guys, this is my treasurer's report, and my finance committee meets on a monthly basis. The finance committee is made up of both board members and non-board members. Because AgSafe is a regional organization attempting to become a national organization, I have folks on our board from multiple states, and I also have folks on my finance committee from multiple states. So we participate in a monthly finance committee conference call, and this is the document that they review. And so as you can see, this is meaningfully consolidated from our P&L, which is typically 5 to 6 pages long, and not only reflects the income and the expense, but the left side of this document has current year-to-date. It has previous year-to-date. It also reflects the budget and year-to-date budget, annual budget, and then both budget variance as a dollar figure and as a percentage. And then below this net ordinary income, we have other income and expense. There are items that always sit on the balance sheet because it's about the payment of debt and never appear on our profit and loss statement because we are an accrual accounting system. However, the board still feels it's important to understand about that cash in and out function because we need to know what our cash position is. So these items below in this other income, other expenses, and capital campaign stuff is because we function in accrual, this is all money that's actually moving in real time, but the movement of this money is seen in the change in our assets and liabilities on the balance sheet. However, the board wants to know how much money came in from a pledge payment and how much of the principal of debt was paid during the previous month's time. I have fiddled with this dashboard. We get a new treasurer every 2 years. Every 2 years, my treasurer tells me they'd like to see this dashboard a little bit differently. My board over the years has deferred to the treasurer in terms of how they want this information presented. This is the current format. The Nonprofit Finance Fund is an exceptional organization. It's a national organization that I would encourage all of you, if you've not ever participated in any of their webinars or any of their activities, but I bring the Nonprofit Finance Fund out of their San Francisco office in, and they do a financial literacy training for my board every 3 years. Because of our board rotations, it's about every 3 years that I've got new faces that need it, and the dashboard concept first came about 6 years ago when the Nonprofit Finance Fund came in and did financial literacy for nonprofits for my board. Because just like you need to know this information, board members need to know it too, because how we manage expense, manage debt, what we call things, is different from the for-profit world. And sometimes board members provide guidance or make decisions or make recommendations based on their professional experience in a for-profit capacity, and it doesn't translate, or it's not an issue that we need to be managing within the nonprofit sector. Very briefly, here is AgSafe's annual report. Annual reports are another type of financial reporting that should be taking place. There is no legal requirement for annual reports, but I think it's a good best practice. That being said, we provide all of our materials in dual language, in both English and Spanish. So here at AgSafe, we have become a big fan of infographic snapshot as a way of reporting high-level metrics and overall performance. And so this is the English version of our most recent, our 2017-2018 fiscal year annual report. And then there is the annual audit. And again, this is one of those areas where, for instance, in the state of California, this is an instance where we do have additional government requirements. So this is a nice transition. Here in the state of California, if you are a nonprofit organization operating at the $2 million level or greater, not only do you need to be conducting an annual third-party audit, but you need to have a separate audit committee. And as such, and this is made up of individuals, only half of that committee can be individuals on your finance committee. Your treasurer cannot chair it. There's a number of other specific rules as it pertains to having an accounting firm conduct a third-party audit. There's also different degrees of audit. Again, in the United States, in the vernacular, it's known as a yellow book audit. But that is the most stringent type of audit that your organization can undertake, and that is the level of review that needs to be done that would allow you to be eligible for federal grants or federal contract resources. I'll tell you, when I came to AgSafe, we waited 3 years before we had our first audit conducted. We were nowhere near the $2 million mark. We were a rocketing $350,000 annual organization, but our books were not going to withstand the scrutiny, because the audit is not just a function of, double checking money in, money out, and what you say you've spent it on, but it's as much a deep dive into your organization's standard operating procedures and ensuring that your organization has appropriate checks and balances in place so as to prevent somebody from doing something that they're not supposed to, and that can take many forms. Folks, I'm really sorry. I'm gonna power through these last couple of slides, but I want to encourage all of you, if you have more specific questions at the end, I want you to send me an email or reach out. A couple of other things to keep in mind specific to your financial literacy is the requirements of the government. So we are a nonprofit organization, but and we do not pay corporate tax, but we still have to pay property tax, payroll tax, and sales tax. So what a lot of people don't understand with your nonprofit tax-exempt status is we are exempt from paying federal corporate tax. Some states have additional requirements, and you still have an obligation to pay property tax should you own physical property, as well as payroll tax for employees and sales tax. And in addition to which, for instance, we have an employee in Kentucky. In Kentucky, she has a county level payroll tax that that we as an organization have to pay, whereas in North Carolina and in California, the other two states in which we operate, that is not the case. So understanding your tax implications and just making sure, in particular, like LaWanda provided a comment early on as she's the first executive director and founder of her organization, is I want to make sure that folks like the only thing you're getting out of is federal corporate tax. And you got to do your homework to make sure you're taking care of not only state or provincial taxes, but county taxes as well. And these three areas are areas that we do have tax liability for. This also just speaks to the importance of ensuring that if this is new to you, or if you're a development person who's aspiring to become an executive director, or you're a new executive director, you need to engage trusted third-party accounting assistance. A lot of times we try to piece this stuff together on our own as nonprofit leaders, and this is absolutely an area where you need to spend the money, because you get what you pay for in this regard, folks. Spend the money to ensure that you have an accountant who knows nonprofit accounting and nonprofit finance. For instance, to be an auditor, to be an accountant who can perform the Yellow Book audit, those individuals have additional continuing education and testing requirements connected to their Certified Public Accountants accreditation. So you need to be finding folks, quite frankly, working with someone who is Yellow Book audit educated. Again, I'm speaking to the uniqueness here within the United States, as someone who is a trusted resource that can help you in navigating these challenges. Depending upon the size of your organization, your board of directors can play a very meaningful role or very little role at all, and that's really a function of, is yours an operating board or a governing board? Ultimately, though, the board of directors is who bears the financial liability for the organization, and I want to make sure everyone is clear on that. It's one of the reasons why you have to have directors and officers insurance as an organization to help protect your directors, your board of directors, from the liability that comes with, they are the technical, quote-unquote, owners of the nonprofit for the duration in which they serve on the board. Those folks need to understand that coming into that role. So EDs, if board development, board cultivation is part of the role that you play, people need to know that they're on the financial hook. So if this thing goes sideways and goes belly up and the organization has money that is owed when it all went down the toilet, that is why you have a directors and officers liability policy. So the insurance policy is what is tapped to pay those debts, not those individuals themselves. If you're an operating organization, if your board functions from an operating perspective, for instance, I have a board member. We are a governing board. We have a paid staff. Our staff prepares the financials. We are the ones that manage the day-to-day financial activities, and we report that information to our board through our treasurer and our finance committee, and they say to us, this is how much or how little information we want. On the flip side, I have a board member who is the treasurer of an operating board, and he keeps the books. He keeps the check register. He keeps the checkbook. He's the one that enters the information into the accounting software. He's the one that generates the reports for the board to review. He's the one that generates and creates the budget. So there's an entire spectrum of the level of involvement of the board of directors, and if you're a big enough organization to merit paid staff handling things, paying a third-party accountant. When I came to AgSafe, we didn't have the staff capacity, but we were using an accountant to keep our books for us, and that was being spot-checked by our treasurer. Guys, there's lots of ways to skin this cat, and as your organization becomes bigger and more sophisticated is where you need to have those additional layers. We didn't always have a finance committee. Things just went from the treasurer and the accountant directly to the board. But as our organization became more sophisticated, became larger, and we transitioned from that operating work to the governing work, the creation of a finance committee was essential in having that extra layer. It's also, for me, a great place for me to engage potential new board members and or leverage folks. I've got 2 people on my finance committee who have said they never want to join our board, but they're brilliant financial minds, and their involvement on our finance committee is a great way for them to give back to AgSafe and use their time and their talents. Okay, last but not least, I mentioned the audit committee. Again, your state might have requirements because of the size of your organization. I will say if your state doesn't, it's still a good idea to at some point delineate the duties of the audit committee as well as the finance committee. It allows a group of people, I mean, time is precious, right, guys? You're all bearing with me as I'm at 7 minutes over. But finance committees do a lot of heavy lifting because they dig into the weeds of things. My finance committee looks at our P&L, looks at our balance sheet, gets into, the treasurer's report is where they start, but they get a copy of those documents. So if they want to get granular, they can. You want a group of people volunteering their time on the audit committee to do the exact same thing, to go through the audit, to ask the auditor more specific questions, and then be able to report the bigger picture information to the board of directors as a whole. I've spoken to the duties of staff, but I'll just reiterate, at the end of the day, the responsibility for the financial state of the organization falls to the board of directors. It is critical that the staff that are engaged understand where their role ends and where the role of the board of directors begins. Barbara, your question again about the name of the organization that will train board members in finance reporting and management. It is the Nonprofit Finance Fund. They go by NFF, but again, Google Nonprofit Finance Fund. They have offices all across the United States. Financial literacy, financial education, financial consulting, micro-lending, they do it all, but if you need really good board training in nonprofit finance, that's the group for you to go to. Gang, thanks to all of you who hung in there with me for the extra 8 minutes. There is my email. I have an unhealthy relationship with it, so please do not hesitate. If you have questions, if you're a development person who needs guidance and help on how to get through to your ED for access to financial information, if you had questions and you didn't have a chance to ask it, Angela, I have not forgotten. I will get the timekeeping software that we use included in the follow-up document that I do, but gang, thank you so much for participating today. That's the email. I'm on Twitter occasionally. I have a 5-year-old, so not as much as I used to be, and that's the office number here at AgSafe. Ladies and gentlemen, thank you so much for your participation today, and be sure to check out the additional webinars that AFP is providing for the rest of the calendar year as a way to give you some additional information and resources. Thanks so much, everyone.
And thank you, Amy. And to our audience, we thank you for joining us today. Please take a brief moment to complete our survey, which helps us program future events. Upon completion of the survey, you'll be able to download and print your certificate. For a complete list of upcoming webinars, please visit us at www.afpglobal.org/webinars. And that concludes our program today. We thank you for joining us, and have a great day.